It's about that time of day again. My name is Joseph. Today is Thursday, December 1st, 2016, and this is your nightly newsletter. We're covering crude oil, S&P, gold, euro, and FDAX this evening. Crude is bearish in the short term as buyers take their profit after a roaring 24 hours, and price attempts to move back to the $50 round number tomorrow. Even the S&P is also bearish, trading at the high of a short-term trading range with a target going back to retest the lows. Gold is range-bound and rotating back to the high of the range, where we assume that sellers will be waiting to use the two-try rule to sell the highs. Euro is bullish, trading at the high of a narrow bull channel and trying to finish a measured move target for tomorrow. And of course, the FDAX sits bearish and trading at the end of a bear wedge, which tells the bears to stay patient for counter-trend traps and failures at resistance levels waiting overhead. Boy, I have another great newsletter in store for you guys and gals tonight. We got a Friday session coming up here, first Friday of the month. We got non-farm payrolls tomorrow, tons of opportunities setting up here for tomorrow's session. Before we jump in, though, I do want to remind you the only place to watch the full-length version of this video is on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry, there's a link in the description of that YouTube video. Follow that link and come join me on the blog at Sideways Markets for the full-length version of tonight's newsletter. While you're here, don't forget, join the mailing list. Give me your name, your email address, and I'll send you an email every evening when our nightly newsletter goes live. Download those charts right below the video tonight on the blog. There's a link that says click here to download today's charts. That way you can have all of my charts from tonight's video on your computer for tomorrow. In the upper right-hand corner, don't forget to grab your free pass. If you're not a student here at School of Trade, if you're not a member here at School of Trade, grab your free pass in the upper right-hand corner. You're going to learn more with me in a few hours on your free pass than you will anywhere else on the interwebs. I can guarantee you that. And if you're brand new here to the School of Trade community, get a great frequently asked questions page. Use that link right on the right-hand side of the website to answer all the frequently asked questions. So now you'll know the who, what, where, when, and why. We're known as the industry leader in day trading education. Hope you guys are having a great day out there. What a fantastic week it's been. We knew we were going to be getting some volatility. We had OPEC on Tuesday. We had, of course, the end of the month yesterday. And, of course, brand new day today, brand new month of December. I've been telling you guys this for a few months now. This is always the best time of the year to be trading. Lots of volatility, lots of reliable opportunities. We've had a fantastic few weeks here in our trade room. And don't forget, you don't need to do all of this on your own. I look forward to seeing you guys tomorrow morning in real time, tomorrow morning at 8 o'clock Eastern time with all of our advanced members here at School of Trade. Enough about that, though. Let's jump right in. What do we have tonight? Any major news on the calendar here for tonight? Jeez, look at all this news here. Got a little bit of news coming out of Australia tonight. The retail sales at 7:30 p.m. Eastern time. I don't expect that number to be much of a market mover going into the overnight session. What I do expect to be a market mover tomorrow is going to be the employment number at 8:30 a.m. Eastern time. This is, it's up there. It's one of the big 2 or 3 news events that we get. You know, the FOMC announcement, the non-farm payroll number, first Friday of the month. There's only a few big market-moving events that we really see the markets anticipate, 12, 18 hours ahead of time. Everybody's waiting on the employment number tomorrow morning at 8:30. So that's pretty much the only news of the morning tomorrow. It's a Friday, so you've got to assume early in, early out. You always want to be thinking, keep an eye on the volume, keep an eye on the price action after 11 a.m. on Fridays. Definitely be careful trading the afternoon session on Fridays. And typically what happens is on that non-farm Friday, again, don't forget, the first Friday of every 1 month, as long as the first day of the month isn't a Friday, you're going to get that non-farm payroll number, the employment situation, right? The big jobs report, right? This is the one coming out tomorrow morning, first Friday of the month of December. Now, in my experience, you're going to get one of 2 scenarios after that news comes out tomorrow. If the news comes out as expected, analysts have known about this news ever since the ADP employment came out early on Wednesday. So ever since Wednesday's ADP employment number, which was a very good number, by the way, right, we have known about what's likely going to be coming on Friday. So analysts have had plenty of time to do their analyzing. They've got their reports on the desks of the boss, and the boss, of course, has delivered them to the trading team in the bullpen. So as of tomorrow, if this news comes out tomorrow morning at 8:30 and it's right as expected, you can pretty much expect the market to be a little bit sluggish because this news has already been priced in, right? There's already been 2 days to price in all of that anticipated report coming out. So one scenario is it may take 5 or 10 minutes for the market to kind of slosh around a little bit and then find a direction, right? So give it some time if it's slow, right? Don't try to force a big move. Now, the other scenario, if this number comes out tomorrow and it's outside of expectations, right? If it's dramatically higher or lower than what they were expecting. Again, Wednesday morning at 8:15, we heard from the ADP employment report. That number is a big leading indicator of what Friday's report's going to be. So everybody knows about what Wednesday's report was. They'll be ready for it with plan A, B, and C. Tomorrow morning, if the number comes out drastically outside of expectations, then traders have to execute plan B or C, right? If it's higher, plan B. If it's lower than expected, plan C. And that's where the volatility comes in. That also expected to take about 5 or 10 minutes to calm down before we get something tradable. Moral of the story tonight. Tomorrow morning, be careful leading up to the news. It's usually quite low volume and unpredictable before the news comes out tomorrow at 8:30. After the news comes out, everyone's waiting on this news report. After the news comes out, either it's going to be real slow because it's priced in, or it'll be real volatile. Either way, give it 5 or 10 minutes, stay patient, and then find that new direction. You normally are going to get a pretty good direction or a complete sideways range coming out of that news report tomorrow. Once we know what we're going to get, we'll be, of course, sure, right, to execute the plan according. And don't forget, we'll be with our students tomorrow in real time, right, 8 o'clock Eastern time, getting ready and trading it as well, right? So don't be a stranger. Come out and join us. Got the plan for tomorrow. Let's jump in. We got crude, we got S&P, gold, euro, FDAX. Let's roll those sleeves up and get ready for Friday. Crude is bearish in the short term as buyers take profit and price rotates off the high of a long-term bull channel on the way back, assumably, to that $50 round number. The bears have a strong move lower. You can see that real sharp move lower, which likely is being fueled by profit taking from the buyers after 2 full days of running. And with the resistance trend line overhead, right, see that red resistance trend line overhead, that's likely going to keep buyers away from buying a shallow pullback, right? Look at a great short-term opportunity to sell the next pullback down into that battle zone and into that $50 level tomorrow. With that said, we don't want to forget about the bulls, right? The bulls have dominated this market for the past 2 sessions in the wake of the OPEC meeting yesterday. The buyers would love to buy this market down around $50 a barrel, and they need to be careful buying into that resistance trend line for a move going back up to retest the high. Here's a really good example. As you can see on the chart, we have a very obvious bull channel. That bull channel you can see here really couldn't keep up with the demand today, right? You'll notice here it spent a lot of time above the high of that bull channel, right? So of course now we're seeing a double overshoot, and double overshoots are usually good for either a short-term reversal or at the very least a deep correction. So our eyes are definitely, for the buyers, our eyes are definitely peeled looking in this area down here, right? It's looking to buy the low of that bull channel. Little bit of an overshoot, and it really all depends on kind of what the appetite is, right, of these buyers tomorrow. It's been a real strong last few days. Usually when we have a couple days of really strong movement, oftentimes we start seeing a trading range. You see a market that really can't get enough of the buy side for a few days, and all of a sudden, buyers aren't going to want to keep buying high, but this isn't a bear market yet, and so every time it pulls back, it gets bought up, but it doesn't go to new highs. It pulls back to attract more buyers, right? It goes up, but it doesn't go to new highs. Pulls back to attract more buyers, right? You get the point, and we start seeing these trading ranges. When we see a range like that, obviously our goal is to buy the low, right, of that range and be very careful, right, buying the high. I don't want to sell the high, right, unless, of course, I'm selling out of an open position, right? I don't want to sell the high because it's a very strong bull market, but I want to be very careful, right, waiting for a real strong breakout that can hold a pullback and show me that it really wants, right, to keep exploring higher prices. So this is definitely something we're watching for here tomorrow, right? Big run up. This may end up being your trading range, right? This may end up being that trading range. So the bottom line is we've got my eyes on this area right about there, right? So price coming down, back up down, back up, right? So we're looking in, again, in this area here, call that kind of your battle zone from 50.63 all the way down to that $50 a barrel area. And at the same time, though, with this resistance trend line coming overhead, right, where I would normally be looking for a failure, right, to buy higher here, I'm no longer interested in buying that failure now because of that resistance trend line. So this now opens the window wide open now for those bears. What I'm looking for the bears is basically to use this 51.26 area, right, get up, test the trend line, right, and then back down again. Whenever we see a real strong move in one direction, we oftentimes see at the very least move up to resistance, back down to double bottom, or at the very most, right, it becomes a measured leg, right? So keep an eye out for a measured move now coming off of that high. I call it a measured correction, right, in a bull market. So sellers definitely have a short-term edge right now, would like to get up here, see these buyers try to run it higher, and then sell into this on the way back down. The key is going to be selling high, though, because I definitely don't want to get wrapped up in trying to sell into this rising support trend line, into this, right, into this prior support at 50.63. Again, I really don't want to sell in this area here. I'll gladly look for, again, that failure trap, right, send it back down, stay away from this area, right, we expect long-term buyers to come in. If we can run, then I can make the move back below the 50. So it's really going to be either get to it high, right, or get it through that 50 area. And it's going to have to really take a lot of strength going through that 50 area for me to feel confident being a seller just because of that big round number tomorrow, right? So keep an eye on that. Now, if for some reason, right, again, like I said, we really don't know enough about what the appetite of these buyers are going to be. The trading range may be right here. Right? This may be the range today. So we may see this market go up, right? Sellers fail, and this might slam right back higher here, and this may be the range, right? Big, strong move up. This may be the range, right, tomorrow. If that is the range, stay focused on buying that low, using traps, using failures. We teach all these traps. We teach the failures in our advanced course, right? Beginners of the fundamentals. Intermediate course is all the technical analysis you see me using, and then all of the trading strategy is going to be in the advanced course, right? One thing you want to be careful about, though, is trying to buy the high. You want to see a real strong, and then make sure it holds that pullback. Make sure those buyers can hold a pullback. Don't you dare buy those highs. I don't care how strong it looks, right? You'll be buying into majority of profit taking, and it'll be a lower reliability trade. So buyers either looking to buy that dip on the way back up. If it does just slam higher here and get pinned higher, right? Buy the low of that range. If it runs through the highs, right? Wait for them to hold that pullback, and that will give you the juice you need, right, to keep going up to another measured leg higher. Sellers look for that trap and then back down. Again, be careful selling into this area of support until we can get some strength here going below that $50 a barrel area for tomorrow. All right, guys, very exciting session for tomorrow. I won't be too surprised tomorrow, though, if we see those buyers take a bit of a breather here, just because of the two extremely active days we've had over the past few weeks here. S&P time. The E-mini is bearish and trading at the high of a short-term trading range this evening, with a target going back to retest the low. Now, the day started off with a trading range, and then sellers took it lower to reach the double down target before they took their profit, bounced off the low, and created another trading range. So there's two trading ranges here with a bear bias to them. At this point, we assume sellers are waiting for trading opportunities at that 92.5 reversal line and the 94.5 battle zone for a move back to retest the lows. Right now, the objective, the target for the sellers is to retest those lows around 21.86, and they want to get up off of these lows so they can sell this thing back down. Buyers, on the other hand, need to take control of this market before they can think about buying, which means they need to see a strong, keyword here is strong. Buyers got to see some strength, then hold a pullback, and then they can look for buying opportunities going back to where the day began. First thing you